Good morning, good morning. I'm Steve, this is Amber.
Good morning.
And I have spent my career in the trenches of insurance operations, running distribution, running operations for carriers, for MGAs, or consulting with Fortune 500 financial services company. And here's one thing that I've learned, that the single biggest lever you have for sustainable growth, it's not your tech stack, it's not your product portfolio, it's how you manage your people. Most organizations are managing it with gut feel, they're managing it with inadequate spreadsheets, when they really should be using some rigor, much like you do with your financials. So what we want to do today is to demystify a little bit about resource management. I want to show you an effective capacity, effective capacity management is not just an operational discipline, it's a foundation for growth, a foundation for profitability. And I want to demonstrate what a good tool would do and how you could use it daily in your business. Leading up to the summit, I had some conversations with clients, with colleagues, and I took those notes and I loaded them into AI and said, give me a word cloud, a word map of these conversations. And what you'll see, you see AI, you see integration, you see digitization, but what is always at the center, no matter what your initiative is people. And here's the catch. Sales growth requires more salespeople, more processing people. Systems integration changes what people do. BPO shifts from one group of people to a more efficient group of people. AI. Have y'all heard anything about AI this week? Okay. AI is going to streamline and change what people do. It's going to reduce some headcount. Complexity of our industry makes it more difficult. We need more people to handle that. Retirements means we have to have some different hiring practices, probably a longer training ramp. And all of these forces are pulling us in different directions. So if you don't have a disciplined way to manage your workforce through that complexity, you're probably flying blind. So now you're in this session, so I'm assuming you do care, but you may be saying, why do I care? Well, I think we all care because labor costs are sticky. Typically, labor costs are our biggest expense, right? And if it's not easy to scale labor, if we overhire, then we have costs that linger and they compound. If we underhire, we build backlogs, quality stops or drops, and then that too is not easy to scale. It compounds very quickly. Growth, and everybody wants to grow, growth typically exposes inefficiency. What worked in a low volume typically breaks at scale. So without capacity visibility, the instinct's just to throw more bodies at it, and all that really does is raise our cost. And if I've learned anything this week, it's how quickly change is accelerating. Probably faster than in any of our lifetimes, right? Digitization, integration, outsourcing, AI, all of these things are shifting where people add value in the process. And capacity clarity is what enables us to make proactive decisions rather than reacting after the damage is done or after the impact has hit us. There are three forces that are converging on our industry that really change our demand curve for talent. We obviously live and work in a very complex business environment, right? Fragmented and complex. We have thousands of agencies, hundreds of carriers, multiple systems. We have workflows that vary from company to company, agency to agency. Heck, they even vary within our own buildings. And that complexity makes it very hard to scale and to standardize our business. You need more people just to manage the complexity of the industry we're in, right? Retirements, the looming retirement cliff is probably what scares me more than anything on this slide. How many of you plan to retire in the next 15 years? Yeah. That's a lot of institutional knowledge. That's a lot of pattern recognition that's walking out the door. And it's going to be hard to replace 25, 30 years of experience with a 2-week onboarding program. Replacing that expertise is going to require longer training cycles, better documentation, and most critically, a clear understanding of what the job is that's being replaced and how long it's going to take in the new world when I don't have all that experience. AI and automation, everybody wants to talk about AI and automation. It is absolutely going to refine what we do, and it's going to reduce headcount in the process. But organizations that win will be the ones that anticipate what the new demand looks like, and they plan for it rather than reacting to it. Amber, could you talk a little bit about how this fits in with the whole IOD strategy that we talked about yesterday?
Sure, thanks, Steve. So I think a couple of things. As we've talked about this week already from an IOD perspective, it's obviously extremely relevant to how you're doing your systems integration, you're managing your data hygiene, obviously working on process optimization and standardization so that you can automate, right? We've had a lot of conversations on that, but I think tied specifically to the capacity management, as we heard from some great panelists yesterday, you have to rethink your role definitions. You have to rethink the role clarity on what each role in your organization is going to look like in the future tied to AI and automation, and that requires a whole rethinking of a capacity management model. So first kind of doing the role definitions, which means from an IOD perspective, you really have to take into consideration what is the data that each of the resources in my organization needs in order to be successful servicing my customer. What are the new processes and workflows that they're going to have to follow as part of the role that I'm creating for the account manager, for the client manager? Are those processes efficient? Does it enable them to do the work in the way that we've described the role to be? Do I have the right number of the right resources in the right role? And without really knowing whether they've got the right data and the right processes and workflow, it makes it extremely difficult to do a proper sort of modern enhanced capacity model. And then lastly, as we've talked about a lot this week already, you're thinking about how you're going to use AI and automation to support the work that's happened, and that creates new role descriptions, new role clarity that comes as part of that, and a whole new way of thinking from a capacity model perspective. So the old ways of looking at just revenue per account manager or number of accounts per account manager is not going to be the same 5 years from now with either strategic sourcing, through automation, through AI, or a combination of those things. It's going to look quite different. And I think what Steve is talking us through today from a capacity model perspective, and what I heard from some folks that were talking about this at the roundtables yesterday, you kind of have to know what your benchmark is first, right? You kind of have to make sure that you're assessing what do the roles in my organization look like today? What is the capacity that I need in order to scale today? And where do I want that to be in 2 years or 3 years? Or how do I think that is going to change over the next 2 to 3 years? And so I think the IOD framework fits very nicely into one, benchmarking where you're at today, and then figuring out what those building blocks are, what those continuous improvement remodeling or modernization of your workflows and your workforce and your capacity is going to look like in the future.
Absolutely. And if you remember one thing from this session, make it this: capacity management's foundational. It's not a nice-to-have analytics project. It's the discipline that connects your promise to your customers to the resources needed to deliver on that promise. And when you have good capacity management, execution becomes simpler. Automation value is measurable and growth is sustainable. When you don't have it, you're guessing. And in our business, which is a labor-intensive business, when you're guessing, that's expensive. Now, I want to take just a second and kind of define what we're talking about, because I will use a lot of different terms: capacity management, workforce management, staffing. We use those terms very loosely, but what we're talking about here is really a management discipline. It's not a spreadsheet exercise. It links integration, optimization, and digitization by making the staffing and expense impact of every change visible and measurable. It's an enabler across the 3 IOD dimensions. It ensures that we have the right people with the right skill set in the right place at the right time. And for leaders, it's a game changer. It provides objective data, and it shifts the conversation from, I think I need 10 people, to I know I need 10 people, and here's the proof. And that's a fundamentally different conversation, and it's one that the C-suite and the finance people actually want to have with you when it comes to staffing. Now, I want you guys to help us play a game here. Effective immediately, you are now the management team for Summit Incorporated. And you've all been promoted. You're the managers. Take your phones out, scan this QR code. There's a simple 5-question survey that's going to help us judge the capacity management maturity of our management team. Now, at the end of the presentation, there's another QR code, and there's a more robust survey that you could actually take for your organization and get the analysis and get the results right there you can print out. And so we'll show you that later. But this is a sample, and this will kind of guide our discussion for the rest of the presentation. So take a couple of minutes, and then once we get a significant concentration of results, we will pop this up and talk about what it tells us. And in the meantime, if you have any questions, I'll try to answer them while you're answering the survey. And also, while we're doing this, when we close this session out, none of this information stays, so there's nothing that we're keeping. So without looking at any of the other questions or whatever, that tells me that most of us, when we make staffing decisions, hiring decisions, we're reacting to something. Turnover, backlog, changes in what we do. And so if I was coming in to consult with Summit Incorporated, I would look at this and say, okay, our weakest performing area right now would be special projects and unmeasured work. We don't have a good way of tracking that. Okay, well that tells me probably our staffing model or our data-driven staffing approach doesn't adequately account for the stuff that's not transactional. So we'd want to make sure that we can capture that. And so the first thing I would do, we have a fairly decent amount of time standards and expectations. We do a good job of capacity and cost controls, but we probably could do a better job of forecasting, of being more scalable as we grow our business. And again, how do we account for this stuff that's not pure production driven? Does that feel right from y'all's experience that we're more reactive than proactive?
Is anybody surprised by the results of kind of the industry average? Or, I mean, we've got a lot of like really good folks with running really good organizations in the room. All of us, I think we run really good organizations. And based on these results, we're just kind of meh, right? So is that surprising to anybody? No?
And it's not surprising because most organizations, staffing is a once-a-year thing until I have a backlog or until I have turnover, right? I do it at budget time. So we can go back to So thank you for doing that because it validates what I kind of suspect is the norm in the industry, right? So how many of you, to validate that we're actually thinking about this correctly, how many of you, when you go to ask for new people, hey, boss, I need 5 more people. Well, I'll give you 2. It's like we're haggling over cars, right? That resonate? How many of you have ever built a backlog or had a backlog? You're getting yelled at, you're getting chastised, and you know in your heart it's because I don't have the people to get the job done. It's not a productivity issue, it's not a performance issue, but I just need more bodies, but I'm still getting yelled at. How many of you as managers go and ask your boss for people and you feel like they don't really see you, they don't really hear you? How many of you executives, when those managers come and say, hey, I need more people, you're not convinced that they really need more people? And that's normal when we don't have a staffing model or we don't have an objective way of looking at staffing. And the other thing that I think is really insidious when we do this is the last bullet point there, what I call staff inflation. And let's talk a little bit about what staff inflation is, okay? It's been everywhere I've ever been in my entire career. It's innocent, it's honest. But at Summit Incorporated, we base staffing on our gut feel, our historical knowledge, right? So we know that our employees can do about 10 policies per week. We have 20 employees. That means that we can do 200 policies a week, right? That's a staffing model. Very straight line, but it's a staffing model. So as long as we are at 200 policies or less, quality's good, costs are controlled, everybody's happy. But what happens when we start to get 300 policies a week? The wheels fall off. We start to build backlogs. We have to use overtime. People get burned out. Quality drops. People leave. Most importantly, our customers get really unhappy with us. Now, Summit Incorporated, you're an enlightened group of people. You know about ReSource Pro. You pick up the phone, you call Amber, you say, Amber, can you come help me figure out how to take some of this off our plate? Amber says, what do you want to do? Well, I'd like to get about 200 of these policies to you guys, and then we'll manage the rest, and we'll take growth on as it happens. So Amber comes in, they do an impact assessment, and it says, okay, we can do 200 of those. It'll be 5 FTEs from the ReSource Pro perspective. Sign me up. When do we start? I'm a hero. But wait a minute. You have 15 people. You have excess capacity. Yeah. We're going to keep that for growth, okay? Smart. Now, we operate at 100 internal. They're doing 200. We operate internally at 100 for 3 months, 4 months. We get used to it. Then what happens when all of a sudden we get a 50 policy increase in-house? What's the first thing you hear? Oh my gosh, they're killing us. We got 50% more business than we've been getting. As the manager, you look at it and you're like, oh, you're right. Then you go to the boss and say, boss, I've got 15 people. We got 50% more business. I need 7 or 8 more bodies. Finance says, no, I can only give you 4. We take them. Get the work done. We're heroes. We pat ourselves on the back. But what has happened? We could do 200 with 20 people. Now we can do 150 with 19 people. That's staff inflation. It happens, and we don't even see it happening. Without a model, productivity dropped 21% in this case. Headcount grew. Nobody noticed. It compounded silently. With a staffing model, every change, outsourcing, growth, attrition, is quantified in real time. And again, we move from I think I need to I know I need. So a good staffing model, a good staffing or capacity management program will help us guard against staff inflation every time.
Yeah, and Steve, just one thing to add to that, like all of that is what you guys live every day when you're trying to determine how to staff your operation. And that scenario that Steve just walked through didn't even factor in the investments that you're making in technology, automation, AI. So at some point, as we've talked about this week, like there's going to be an expectation that these investments in technology and AI are going to have a positive ROI, right? They're going to lead to some type of a performance gain or a productivity gain. So when you add that into the complexity that Steve was walking through, it just multiplies the difficulty, right? So that stafflation, we're also seeing that happen all in industry as well as in other industries with AI, where CEOs are saying, wait, I just made this $1 million investment in AI, yet where is the savings? Where are the actual hours that we've saved? How is the capacity shifted?
And stay tuned, because we're going to see an example of that in just a minute. How many of you have a staffing model that you use? Show of hands. Okay. How many of you like your staffing model? How many of you trust your staffing model? Okay. Well, a lot of people say, I don't really have a staffing model. I think of a staffing model as much of a communication tool as it is as a calculator, right? It's a translation mechanism. It converts work into hours, hours into people. And when I talk about FTEs, I'm talking about full-time equivalents. In case you don't know, that's basically bodies. And so it uses 4 inputs: volumes, tasks, volumes, allowances, and time standards. It reduces ambiguity. It aligns managers, finance, and executives on facts instead of opinions, and it supports consistent staffing and consistent cost control. And a good model should also allow us to do what-if scenarios, forecasting. What if we grow 20%? What if we automate intake? What if we outsource renewals? What if we have 3 retirements next year in an underwriting department? Each of those questions becomes a 5-minute, 10-minute model run instead of a 2-week internal contentious debate about what we need. And again, most importantly, it moves the conversation from I think to I know. Now, if you have a staffing, I've seen a lot of staffing models over the years. There's good ones, there's bad ones. There's 2 kinds of bad ones: very complex, very simple. Most of them are very simple. They're straight line models. So at Summit Incorporated, we have 300 policies or applications a week. It takes us 13.33 minutes to do those. That's 200 hours divided by 40 hours for an FTE. That means I need 5 FTEs. If I have 5 FTEs, am I going to get those 300 applications processed every day, every week? Probably not. And this is where we get it wrong most of the time, right? A straight line model hides real demand. It ignores PTO, UPTO, productivity variations. Nobody works at 100% day in and day out. It ignores unmeasured work, training, meetings, projects, turnover. It drives chronic understaffing. And that creates backlogs, poor qualities. It leads to lower standards, and it leads to reactive hiring. And then what do? We just stop using it. I come in and say, hey, you need a staffing model. And the first thing you say is, yeah, they don't work. So a good model separates paid capacity from production capacity. And it's the difference between a model that looks really good on paper and one that actually delivers value for you at the end of the day. So this might be what a good model might look like, right? Maybe. So if we said we needed 5 FTEs of work done, by the time we add allowances, PTO, UPTO, productivity variations, etc., that 5 quickly becomes 7. Then when we start to add the unmeasured work, the training, the meetings, and all this other stuff, it quickly becomes 9. And so let that sink in for just a minute. I'm paying for 8 hours a day, and I'm getting less than 5 hours of productivity every day. And now, unfortunately, that's fairly normal in business, right? A 55, 60% utilization rate is probably the norm. That 35, 45% of loss is what we call shrinkage. And if I don't have a good model, I don't have visibility into that non-transactional work or into that shrinkage. When I have visibility into that, I can probably manage it better. And that's why a complete model matters. Without it, you're budgeting for 5, and you're scratching your head and wondering why you can't deliver to your clients. Make sense? So let's take a look at some of the dynamics that we talked about and how the model would help us deal with these. So again, the first one that bothers me, that scares me to death, is the retirement cliff. Well, a good staffing model should account for turnover anyway. So before we ever think about retirements, if Summit Incorporated has 4 turnovers a year, we need an additional 1.3 FTEs just to cover the disruption that we get from turnover before we do anything else. Now, we're going to lose 4 very senior people at Summit Incorporated. 2 underwriters, 2 senior processors. They have 30 years of experience. So we know that our processing time is going to be different when I have people with less experience. So I go in and we do some studies and we say, okay, our time for underwriting or risk assessment is going to go from 20 to 25 minutes, and our time for binding is going to go from 10 minutes to 15 minutes. So we make that adjustment. That means we need an additional 1.76 FTEs to get the same work done that those 4 people were doing that retired. So we now go from 7 to 8.46. When we factor in the turnover piece, we're now over 3 FTEs more than we needed just a few minutes ago. Does that make sense? And that's the difference between a reactive approach and a proactive approach. When you model it, you see it coming 12 months, 18 months out, and you can adjust for it, you can account for it. Okay? So now we got to grow our staff by over 3 FTEs just to handle retirements. Now, you're smart, you're Summit Incorporated, you're above average. Hey, we're going to bring AI to bear. So let's model the impact, to your point, of AI. So the first thing we're going to do is we're going to automate our intake function. And we know that when we do this, we're going to take 75% of what we do away, so our handle time goes from 10 minutes to 2.5 minutes. That's going to save us over 1.3 FTEs. Yay! Because we added to our underwriting or our risk assessment time, we're going to have AI do some of the early screening and summarize stuff. It's going to cut that time in half. We're going to save 2 FTEs, over 2 FTEs of underwriting capacity. We just freed up 3.75 FTEs. We're back to where we were before we started. Again, we're smart, we're good. But what do you do with that 3.75 freed up capacity? You could eliminate them. You could move them to another area that's growing that needs people. You could move them to higher value client-facing work. Or you could do like we did in the inflation example and keep them for growth. But whatever you do, you need to have a plan. What am I going to do with those people? So without a model, AI savings are theoretical. With a model, they're specific, they're measurable, and they're actionable. You can show the board of directors exactly what the ROI is in terms of headcount and dollars. Everybody wants to grow anybody in here does not want to grow their business, they want to shrink? Yeah. Summit Incorporated, we're going to grow too. We're going to double sales next year. We're going to hire some more salespeople, and we're going to buy another agency that's going to help us grow. So we plug in, we go from 300 to 600. Model says I need 5.6 additional people. Do I go hire 5.6 people immediately? I used to run marketing. No, you don't go bet what they promise you till they start to deliver. But what do? You budget for it. You get the requisitions approved. You have everything ready so when the demand starts to hit, I can be proactive and get the people in here without having to jump through all the hoops that we have to jump through to replace people. And that's the difference between proactive and reactive growth. When you model the staffing impact of additional sales before the sales occur, when you model the impact of an acquisition before the acquisition closes, you can budget for it, you can recruit for it, you can hire and train people before the volume arrives. That positions you to accommodate growth, not scramble to survive growth. We all work with ReSource Pro. We've all seen this. I call this the value chain placement. This is one of my favorite things that we have, right? We do everything in the white boxes. You do everything in the shaded boxes. But how do I manage that in a world? I want to maximize, to your point, the value that I'm getting from outsourcing. So if I have a good staffing model, I can maximize what I'm getting from ReSource Pro, and I can also manage what's left over in those shaded boxes. Make sense? So let's look at how we would use that in an example. Now, the example here might be a little exaggerated for the point, but you get the idea. So we're going to double sales, right, at Summit Incorporated. We called Amber. We said, hey, come do an impact assessment. So ReSource Pro comes in. They do an impact assessment, and we say, look, ReSource Pro can do those 7 tasks that they identified right there. We're like, great, wait a minute. We don't have time to do that, but we really struggle with policy checking. Okay, let's start with policy verification. ReSource Pro says we can do that with 6 FTEs. Great, boom. Labor arbitrage says, okay, that's going to save us net $210,000. Again, we're heroes. Go take that and do the work. But if we had a staffing model, and we looked at that, and we said, yeah, but in our, so we took 6 people out of our business to save money. But if we had a staffing model, and we said, oh, wait a minute, it takes us almost 9 FTEs to get that same work done. If we didn't know that, we're leaving 3 FTEs sitting there with nothing to do, and we're leaving an additional $220,000 of this hypothetical expense that we didn't recognize. So when you're using someone like ReSource Pro, I think it's really good to know what does it take in my environment versus what does it take in the ReSource Pro environment. I want to make sure I can maximize the value of what I'm getting from my outsource partner. That makes sense? It also helps us strategically, helps us think about how do we look at this, right? So ReSource Pro said we could do these 7 tasks. We look at that, and they're going to do it with 22 FTEs. We have 36 people doing it right now. We can shift all of that out and save $1.8 million. That's a lot of money that I can use to grow my business. But I also can look at that and say, yeah, I can't do all of that at one time. What do I want to do first? Well, you know, submission clearance is my biggest headache. It's also the biggest staff need. Let's do that next. So it gives us a way to how do we start to roll this out in a very systematic, prioritized fashion. And without the model, I don't have visibility into that. That's great. You talked about all the specifics, but we have chaos. We don't have a good operating model. I still think from an IOD perspective, the capacity management is foundational. So this is an actual real-life example. Had a client, they were growing sales 30% a year, year over year for 5 years. They could sell anything. Their back office was abysmal. They were 300 people processing, and they just kept throwing people at the product. That's the problem. No process standardization. Systems were awful. Service was terrible. Backlogs, it was a terrible experience. So I come in, and they said, we need a technology roadmap. Okay, great. We look at it, and I'm thinking, you can't put technology in here yet because you're going to spend 2 or 3 times the cost just trying to retrofit all the nonsense you have. And the board was like, well, what do we do? And I thought, I know a little bit about staffing assessment. Let's start there. So we did a staffing assessment, and we found out you didn't need 300 people. Even in the dysfunction, you needed 200 people. That told me we had a management problem. So we started focusing managers on the staffing numbers, and all of a sudden, things started to come in line. We didn't fire a single soul because attrition was terrible. So they started managing better, getting a little bit better. Results got a little bit better. In the meantime, we started to look at those processes that were all one-off processes. We did some process mapping, some assessments, and standardized the process. All of a sudden, we're starting to click. We're starting to run this like a business. Did another staffing assessment. We didn't need 200 people. We needed less than 150 people. Oh, wow, this is awesome. Okay, so we operate like that for a while. We get really good. All of a sudden, we start to have capacity freed up. Hey, I'm in service. I could have some extra time. I could go do claims. So we started using cross-functionality. We were hiring like crazy for the sales team. We decided to outsource the licensing and contracting function because it was a big variable pain in our rears. So we moved that out. Now we are humming like a sewing machine with horrible technology. We're now ready to talk about technology. So then we went out and we started to buy new technology. And because we knew what the processes were, they were documented, they were standardized, they were repeatable, and we knew what it took to get the work done, we were able to put in new admin system and workflow system on time, under budget, with 0 customization. Unheard of. Did another staffing assessment, and we found out we don't need but about 70 people to get all this work done with the 30% growth. Service levels were consistent. Everything fell right into place, and we were optimized. And that organization, to this day, 8 years later, is still optimized and not missing a beat. So what we did, and I didn't know it at the time, but what we did was integrate, optimize, digitize. So for 6 months, we integrated, standardized. For a year, we got really everything working in the optimization space. And then in that second full year, we made the digitization move. And it was sequential, but as Dan said yesterday, we started getting benefit every step of the way. We didn't have to wait for the digital revolution to solve our problem.
All right, thank you, Steve. So I think everything that Steve just covered and a lot of what we've talked about this week already kind of focuses on how each one of you in running your organizations can, use data to help optimize your resource capacity, improve your processes, standardize your processes, kind of use management forecasting to make sure you've got the right capacity in advance instead of reacting, allows you to make strategic decisions related to where you want to make investments, related to where your growth is going to come from, related to where you want to bring in new talent to focus on your services. It'll obviously allow you to improve your margins, focus on cost efficiency, and then with a partner like ReSource Pro, we believe, or have an unbiased view, I guess, that as a strategic partner to many of you in the room, that we can just help amplify that, right? Like we can be an accelerator. Like we all know that you are running really successful businesses and you're all quite capable of kind of looking at your next 2 to 3 year horizon and kind of figuring out what the future of your business looks like. But with ReSource Pro, from a partnership perspective, we can kind of help fill in those gaps. We can help amplify it. We can bring you the tools to help you kind of build the benchmark and the baseline for where your sort of staff and capacity is at today, and we can help you build the continuous improvement mechanisms for the future through the IOD framework. So we hope you'll take advantage of kind of the innovation and the investment that ReSource Pro is making to those partnerships. And certainly, like as a follow-up to this, we'll arm you with some of the tools that Steve was talking about to kind of help you guys go through that. But really, I think from a capacity management perspective, we think that with a strategic partner like ReSource Pro, it kind of is a game changer, right? it allows you to put some strategy around your sourcing and some strategy around your continuous improvement.
And for the first time ever, 1 + 1 might equal 3. So 3 takeaways from this, right? First, growth breaks without capacity clarity. Labor is your biggest cost. If you're staffing reactively, you're adding risk with every hire you make. Secondly, being able to move from I think to I know is a game changer. It gives you common language, and it ends the haggling over hiring decisions, and it grounds every decision in fact, not in emotion. I think capacity management, I'm biased, I think capacity management can be a competitive edge. It's foundational to integration, optimization, and digitization. We hope you can see that from this presentation. It's foundational to growth and to profitability. If your competitors aren't doing this, this gives you a leg up. If your competitors are doing this, you don't want to be left behind. So we started the presentation with this idea, and I want to close with it. The single biggest lever you have for sustainable growth is how you manage your people. We covered a lot today. We talked about the industry dynamics that are impacting what we do. We talked about the staff inflation trap. We talked about how to build a model that you can trust. We talked about how to use that to scale your organization without burning people out or overspending on that. So if any of that resonated with you, if any of this is something, hey, I need to know more about that, let's connect after the session, during the breaks today, at dinner tonight, or call me next week. I'd love to compare notes, share some experiences, and try to help you get your arms around that in a more usable, sustainable fashion. I talked about the survey, the assessment that you can do. You can take a picture of this. You can do a 10-question survey and actually get on a graph that looks like the one we had that will tell you kind of where you stack up from a maturity, capacity management maturity perspective. So take advantage of that. If you don't get it today, when we send it out, it'll be in there, and you can track that. So with that, I think we're done. We obviously would probably do an SOW to do that, but what I would do is come in and we start talking about the task. What are you doing? How are you looking at it? We have some ways of doing time studies. If you've ever done a time study in the past when somebody came in with a stopwatch and sat with you and click, 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 very disruptive. So we do a thing called a time ladder, and think of it as a glorified Excel tick sheet where we can actually get statistically relevant volumes of observations and come in and say, okay, here's how long it takes to do this task. We have all of the complexity built in, all the variation, so we can accelerate that time study thing into like a 10-day tracking period and then quickly put a model together. So it's a pretty quick turnaround if you wanted to do that. And then I guess it would be a statement of work to get a very simple assessment done, and then you would have a model at the end of the day.